Okay, so this is the week ending, I think Friday, 20 March 2026, right? So we'll start with section one, which is Nifty, right? Nifty and the main indices. So we'll start with Nifty, then we'll jump over to mid cap, and then we'll see what is happening in the small cap index. So basically, let me check the candle one. So this is 20 March, then we have 19th March, 18th, 17, 16, and 13, right? So we have all the five candles. So it means that this is not a short week, and we have all 5 days in place. So where were we? So last week we were standing around this level, which was around 23,151, right? So we concluded on a note that since it is very oversold, so the market has been falling for quite a while. So you can see like it has been falling in two waves. So we discussed like this is inverted pennant formation, and then we have a short pennant formation, and thereafter we had a dead cat bounce here, and it took resistance at this line, and thereafter it again declined in three bars down, right? Now that was this very oversold scenario where we can see that okay, it might go and hit the short-term moving average that we discussed, right? So this black line, as you can see, this is exactly what has happened. That it spurted up from this day, right? It made a low on Monday. Low was around 22,955. So for now, we have to see and check that this low is maintained or not, right? So 22,955. So this low was done on Monday, and thereafter it recovered for next 3 days, and it took resistance exactly at the short-term moving average, which is a bad sign again, right? So actually, the same thing happens over and over again in the market. The fractal nature of the market remains consistent no matter what. Now, in this case, also you can see that the short-term moving average gave a strong resistance to the index, right? The price of the index, and then again next day, the news came up again regarding the war, and the Nifty gapped down and it closed like minus 3.3% below, which is a very bad close, right? It's a bad gap down and a bad close. Now, again, there are a lot of gaps in between. You can see that from this point till this point, there are multiple gaps which are not yet filled, right? So we'll have to see again with respect to gap theory if that thing is filled or not, right? So let it park for some other day. We'll see next in next few weeks. For now, we don't have to worry about these gaps, right? Now, right now, we are seeing candle within candle. So this is an inside bar right now, and the closing range is actually very bad, right? So as you can see, this candle, right? This candle on Thursday, right? This highlighted part, it made a low of 22,930, which is lower than the Monday's low, right? 22,955. So this candle actually undercut this prior candle, which means that if we were standing on Monday, and if we might have thought, okay, let's call it day one, and this is kind of short-term bottom, then we'll have to find out the follow through day in next 4 to 7 days, right? That is the rule that we follow across all the markets. So we highlight day one, okay, the candle where the closing is more than 50%, right? Reversal from bottom and a blue candle, right? This is everything that is there, right? And on a higher volume, right? Volume was also high. But again, what we have seen is it went up. Then again on day three, day four, we can say this is day one, two, three, day four, it gapped down minus 3.3%, and it undercut the low of this candle, right? So this day one is invalid right now. So we don't have a day one right now, right? Where we can say that, okay, we are standing close to a bottom. It's not there, right? Now, what to do for next 5 days? Now, these are the two candles. One candle is within the other candle. This is an inside bar which we can see. So again, the closing range is very bad. It's close to, I think, somewhere close to 20%. Let me check it out. So closing range is 16% for this candle, and this candle again 16%. So the closing range is very bad, and the volume is very high. So which means that any opportunity that is being seen in the market by the market participants is taken as an opportunity to sell their position or even short the indices, right? So near term, one might see a strong resistance around the short-term moving average, which is around 23,516. Say, let's take it 23,500 lump sum. Around that, there might be a strong resistance, and there would be a resistance with respect to gap also. And on the downside, if this low of 22,930 is broken down, right? So that might be a scenario where further carnage might continue, right? So let me draw the thing in here. So I'll draw like this, right? And then I'll draw like this, right? Done. So again, we are looking for a narrow range in coming days. If market tries to consolidate on the right-hand side, then we can see a narrow range formation. If the VIX continues, right? If the VIX continues to be elevated, so we can see that okay, it might continue to go down, right? Because with elevated VIX and higher volatility, we can see markets tumbling quite fast, right? So we have seen this as second wave. So actually, there happens to be three waves in the market. The third one is still pending. We don't know if that wave would happen or not, whatever the case may be, but we'll get to know, right? So for now, we will not predict anything as in what would happen. We'll go by rules, as in we don't have a near-term bottom in place. Everything is bad right now. We don't have a day one. Fall through day is far ahead of us. We don't know when that would happen. Near-term resistance is in place. Gaps are there, and in short term, we know that the market is reacting as per any comment that comes from the U.S. president and elsewhere in the world, right? So in this time of volatility, we have to be steadfast with respect to our patience and discipline. So we'll move to the second thing, that is the mid cap. Let's analyze the mid cap segment. Okay, I'll open mid cap 50 only. Okay. So we will look into mid cap 50. So basically, it is kind of stronger than Nifty. That is what I can see. Okay, so there are not as many gaps as there are with respect to Nifty, and the fall is quite orderly. So in this case, we can see that the fall is orderly in nature, and the kind of haphazard fall that we have seen in Nifty, that is actually very bad. Like that's kind of a cat falling from a building or roof or something, right? That's really bad. But right now, we can see in mid cap, it's bad, but not so bad as it looks for Nifty. So we can see that it's consolidating in an orderly fashion. So we'll have to wait and watch if it forms a double bottom or not. Like for example, if this low is undercut or not, like this, and then consolidates on the right hand side. We don't know what would happen, but right now we'll have to see what happens. So it's kind of a free fall, and we'll have to see and analyze if mid cap is trying to gain strength going forward or not. Next is small cap. Small cap is again the weakest amongst all that we have seen across all the time frames. So in this case also, we can see that the small cap is quite weak, very weak in terms of the strength, and likewise it is below 200 EMA, and 200 EMA started to trend down. And the small cap index is kind of consolidating for say almost 2 years, right? It's almost 2 years that it's consolidating, and it is not so far away from the low of 37.45, right? Right now the low that has been made is 38.24, and the prior low was 37.45. That's a meager 3% away. So yeah, 3 to 5% away from this low and this closing price. So we'll have to see in coming weeks that if this index is trying to uh, get support around this one or not, if double bottom is in under consideration or not. We'll have to see, right? The volumes are quite high, so we can't rule out such a possibility. But for anything to happen, we need to see something happening in the case of the Nifty as well as for the Sensex, right? So these are the possibilities that we can see. Right now, we don't have a strong bottom in place, and with respect to pattern, also we don't see that thing happening quite soon. It's a news-driven market where, based on any particular news that is being rolled out in the market with respect to war, that hits the market, and then the sell-off continues big time. And it's also selective market where the indices might not be doing something, but beneath the market, there might be stocks that might be doing bad, right? Now, this is an overall update on where the whole market is right now and how it looks with respect to the main board Nifty. And then we have the mid cap segment, and then we have the small cap segment, right? So this was section one where we discussed about the whole market and how things are looking as of now.